Hi traders, Nick here. Welcome to this tutorial on the descending triangle. So what is the descending triangle? It's a strong continuation pattern within an existing downtrend, and obviously it's the opposite to its brother, the ascending triangle. It's found at any market or time frame, and the pattern is created really by a formation of a clear support level along with ever lower highs. At the heart of the setup is a basic support breakout, in the way that the heart of the ascending triangle is really a resistance breakout, and breakouts are very common in more than just one trading strategy, so not just triangles but also in channels and standard resistance or support breakouts. So it's just a variation on a theme really. So let's have a look at our descending triangle formation. So understanding the triangle, well, must have our downtrend. That is important. We must have an existing downtrend. We've got a clearly identifiable support level, so it's tried 3 times and on a 4th time now trying to get through this diagrammatic level I've created, and the ever lower highs. So we've got high, lower high, lower high and lower high. So we have a lot of downward momentum. What's really happening here in real terms is actually we've got lots of sellers, a few buyers, still lots of sellers, less buyers, more sellers, less buyers still. So you can see the downward pressure, and a bit like a tube of toothpaste, this is waiting to explode downwards. So setting our entry and stop loss, the entry we only want to enter when we break through that support level. Okay, that is the point we want to enter, so typically a point below the lowest point already established. Stop loss, well, that's going to go on the back side of the triangle or wherever a suitable swing high is, and this is going to lot of where your stop loss is going to be down to your own individual risk appetite and profile, but typically that's the sort of area you should be putting it for a sensible sort of conservative place. So looking at the trade itself, we get triggered in and hopefully it moves down, and generally, as I sort of hinted with the toothpaste analogy, it should be quite violent if it's a good triangle, because there's a lot of selling pressure building up, and this is like the dam breaking. And then my old favourite of excellence, make sure that you're taking the trade near, well, I use the 50 moving average, but whatever is your chosen moving average, if it's overextended when you try and get into the trade, it's probably not going to run so well. So I personally like to see it reasonably near the 50 or at least the 20 when I get into it. So a few worked examples then. This is Yale Group. We can see the ever lower highs forming, strong resistance, support level, and then bang, breakthrough. Nice punchy move south. This is Brit Insurance. So we've got the support level clearly formed here, lower highs, and then bang, we break down through here. And you can see this one formed over several months, and as it can be found in any time frame, it will form on a daily chart as this is. It can form over quite some period of time, but the move is punchy when it happens. And then finally for the stocks, have a look at McBride. Now this really shows you the power. Unfortunately, yeah, you probably wouldn't, unless that bar just there triggered you in, you probably would have missed this, because it just gapped down and rocketed away, and that will happen. So this might be one you've been stalking for some time, and it just goes, and it's just really too late to get in at this point. It'd be like catching a falling knife, and you've just got to let this go and move on. Oh yeah. Okay, onto the currencies. So euro dollar on the 60-minute chart. You see backside of our triangle here, our support level formed here, and breaks and moves south. This is the Swissy, also on the 60-minute. Again, quite a steep triangle side here, but a very clear support level here, and we break through at this point and move down quite sharply. And finally dollar yen on a 4-hour chart, forming lower highs, very clear support level around here, and then again breakthrough very sharply short. So descending triangle summary, it's a very strong chart pattern I found, and particularly when taken with the trend. It's found in all markets and time frames. As said, always take these things with the trend. It's the key to all trading setups really, taken in the direction of the dominant trend. Only enter on the break at support level. You can get false triangles, so you only want to get in when the triangle is clearly broken. And watch for extension from moving averages. Okay, thanks very much.